yeah, today, guys. So today we are, like I said, like I mentioned earlier, we welcome to the DeFi spaces. Today we're really excited. We're going to be covering a super interesting topic. It's called the next bull run, and we're going to be covering a lot of super interesting stuff about some of the underdog projects that I think a lot of us would love to, you know, be aware of. What should we keep our eye on? What's hot? What's interesting? What's kind of like emerging, that definitely is worthy of some of our attention. So right now, so I'd love to, maybe we'll just dive into some intros, and then we'll dive into some of the questions. So first of all, my name is Sonali. I work as the head of ecosystems for DeFi. And just a quick snippet about DeFi for anyone that's here that is unfamiliar with what we do. So we are like, in some sense, we're like the official DeFi. It's de.fi, and we are a super app. We're a super app because we cover a lot of really unique, I would say, experiences, and features that we offer a lot of people in the DeFi space. So it's everything from your ultimate DeFi dashboard, where you can track all of your cryptos, tokens, DeFi positions, staking, liquidity, you name it. But also, we're super big into security as well. So not only do we want to make it easier to help users be able to find a lot of these different DeFi opportunities with our Explore yields, of course, but we want to make sure that users are able to stay safe. So we are very big on providing a lot of very super unique security tools that help protect you from crypto scams, from getting rugged, that alert you if there's any like fishy tokens, contracts in your wallet. So, we do a lot of that stuff. And of course, lately we've been sort of, I guess, trending and rising the ranks around the social fi. So for anyone that is not familiar with social fi, it's where you can create an account, you can connect with people, build an army of followers, get badges and rewards for, being just a super degen for all the different, actions and activities you interact with. But I'm not going to go super deep here. Just wanted to give you a bit of a gist of DeFi, what we do. So I'd love to introduce our lovely co-host, Victoria, who is from Bitmart. Victoria, if you could please introduce yourself.
Yeah, sure. Well, thank you so much. And my name is Victoria. I am the VP of BD at Bitmart Exchange. We are pretty much overall ranking at top 12 exchange globally, and we have 5 million users and daily trading volume is about 2 billion globally. And North and South America, we have like 45, more than 45% user base. And Asia, we have 28, and then Europe and the other regions. So it has been 5 years and a great journey. And I've been joining the companies for 3 years. And my job is in charge of managing high quality project, managing ecosystem partnerships, global extensions, and incubation, and also part of the investment. So I'm very happy to be here. And DeFi is very fortunate; is one of our portfolio companies, and would love to have some discussion about what we're gonna do with the DeFi for the 2024. Thank you.
Amazing. Thank you, Victoria. I'd love to pass the mic over to one of our personal friend of mine, and definitely a great influencer in the crypto space. I'd love to introduce Mad Crypto. If you could please share a little bit about yourself. Welcome.
Thank you for the invite. Myself, they know me as Matt. My name is Mateo from Mexico. Been investing since late 2016, and yeah, we met Tonali in already, I think, Colombia and Singapore and a bunch of other places. And yeah, I just myself, I invest a lot, but I also been building my project last year and. Just interest in enjoying all what crypto has to offer all the time and big multi-chain guy, so not maxi of any ecosystem, but a big Polkadot enjoyer. And yeah, multi-chain, Cosmos, and that would be my top choices, I would say.
Amazing. Yeah, that's right. We did meet in Colombia. This was like last year, I think, for the Cosmos event. It was super fun. Andy, welcome, Andy. Andy is also a speaker for us for DeFi News, also another great influencer in the crypto space. Andy, please introduce yourself and share a little bit about yourself. Thank you.
Yo, what's up, guys? I'm Andy. Do a lot of education in DeFi. I've been doing it for 3 years. And yeah, we have a podcast and tons of different educational material. I have been doing some angel investing and various different initiatives with DAOs and grants and all different types of avenues to contribute to the space. I have a lot to share, so keep it short. And I wish Lewis was still here because I'm very bullish on Lewis, so hopefully he can back up.
Amazing. Thank you. Okay. All right. Great. So, just with no further ado, we can get started. Oh, sorry. We have another speaker that has also joined us. Super happy about this. Kelly, we're just doing a round of intros. So, Kelly, if you can come on up and please introduce yourself, share a little bit about your name, who you are, and yeah, that'd be great.
Well, welcome to ETF Day, everybody. My name is Kelly Kellum. I'm a cryptoholic, and I'm here for it. I run BitLab Academy, teaching people everything you need to know about how to, navigate this market. I'm out of breath because I'm out of shape, and I just walked upstairs. Let's dive into these markets. Let's dive into the discussion.
Amazing, Andy. Thank you. All right. So guys, so today, like I said, so we have a lot of really interesting stuff we're going to be covering. So ETF for sure, sneak peek, that's definitely a topic we're going to cover today as well. A little bit later on though. I'm just going to go ahead and get started with some of the questions. Yeah, here we go. So 2023 has been an interesting, I would say, bear market. It's been filled with many bullish developments. And so in 2023, we saw a lot of interesting projects come and go. Some were able to weather the bear market storm, expand on development, and stand strong till today. So in your opinion, now this is a question for Matt, for Kelly, for Andy. Um, so from your experience, from what you saw, which stood out to you as the most interesting underdog projects and or most beneficial for users? And maybe Kelly, go for it.
Well, again, sorry I was a little rushed when I did the intro, but I'm happy to be here. Thank you for having me. And I just want to commend every single person that's here right now for being in. We're the last round to be in before the institution. So congratulations, everybody. In terms of this last bear market and coming into the bull market, we are definitely in an ever evolving sort of situation with the market landscape. And it's going to change dramatically, I think, over the next 3 years as institutions move in. One of the most interesting spaces that I've seen, I'll say two actually, over the last year and a half predominantly, is the AI space. And we had that little mini AI season, last year following ChatGPT's release. And we saw AGIX and GRT and Fetch, a couple other coins perform quite well. I expect that we'll probably have another AI boom in the market as the market really starts running. But another space that I find very interesting is the decentralized science world. And we've seen a lot of sort of explosive gains, I don't want to say as expected, but explosive gains in the last 4 or 5 months with some of them like VitaDAO and Gene and some other ones. But I'm interested over the next year and a half to 5 years, really, but let's say next year and a half, this bull market, to see how those perform, because I think just on a sort of viewpoint on the world basis, I think it's a highly needed sort of sector within blockchain to start getting access points to more democratized science that's not sculpted by the money that goes into it. So I'm just very interested in that sector, and my eye has been on it.
Amazing, interesting. Yeah, that's funny that you covered some stuff about AI because we're going to go a little bit deeper into that also later on in the spaces. But that is super interesting. You're right. That has definitely been, I'd say, one of the interesting project categories that have been picking up steam in the past year. I'd love to pass the mic over to Mad Crypto if you have any thoughts.
Yeah, sure. I think definitely some of the most spoken about and hot topic 2023 was real world assets. And I think that will continue to keep going up and keep expanding. We're still very early. Some of the largest projects are still very small, and definitely also one of the big topics that we've seen BlackRock talk about. So, definitely, I think there's big things happening there. My personal favorite, Centrifuge. But in other sites, I think definitely non-EVM projects, I see a lot of potential there. Just like some other virtual machines, definitely we've seen Solana getting a lot of traction, but I think other ecosystems like Near and we have also like Celestia and other ecosystems that have been getting hot, and I think there's a lot of space also to expand there in non-EVM chains, just for the limitations we've seen even with layer twos or alternative layer ones using EVMs. I think there's a lot of space to grow there with alternative virtual machines for sure.
Yeah, and I'm just going to echo that, man. I mean, you started to touch on the modular thesis right there, which is something that I've just been preaching so hard to my audience for the last couple of weeks to months. Really, this idea of why do we need the EVM? Like Ethereum is very, very good at as a settlement layer, right? What a settlement layer means and what that does is it is effectively the most secure way to settle transactions on a chain. So when layer twos batch transactions, they all end up coming to the Ethereum L1 and they settle on the L1. Why is that important? Well, Ethereum has the most decentralized validator set. It's got tons of economic security, and it's very, very important to have that as a settlement layer. But Ethereum is not the EVM, and the monolithic design of Ethereum and other L1s is going to die. This idea of separation of the virtual machine, of data availability and consensus, and even interrupt and sequencing in there at the roll-up level is going to continue to thrive. So, yeah, Matt, I think that some alternative VMs that are exciting, Cartesi, Movement Labs, Fluent, you mentioned a couple others. Solana VM is very interesting, and there's just going to be more coming up. And then also kind of the data availability layer. And this just concept of, in the blockchain space, we've had this trilemma of speed, security, and decentralization, right? And so all these monolithic chains are trying to solve this problem, and they always sacrifice security in the sense for speed and they always sacrifice decentralization effectively for speed and security. At the end of the day, modular blockchains kind of are figuring out the best way to solve these trade-offs. And so I think a lot of these projects don't have any tokens yet. There's going to be tons of airdrops. And the ones which do, as we've seen by Celestia, upcoming Dimension, and others, like it's just, in my opinion, none of the other narratives really matter because what's happening right now with modular blockchains is putting an end to the scarcity of block space. Scarce and expensive block space in crypto is over. It's now as easy to launch a chain as it is to launch a token, which I mean is going to change the entire game. So I agree with you on alternative VMs. I think the EVM is kind of, in a sense, on its last leg in terms of its overall dominance, and Ethereum is not the EVM, and Ethereum is also heading towards a data-focused roadmap. So, yeah, man, I totally agree on the alternative VM side, and I think that the speed, security, and other features, parallelization, and different things of alternative VMs is super bullish.
Andy, some really good points there. And on modular chains and how the EVM space is also evolving. I'd like to also bring up Matthew, who just joined us here just now. Matthew, if you could introduce yourself real quick, your name, a little bit about yourself, and you're welcome to also answer the question. I'm happy to repeat the question as well, just in case.
Yeah, hey everybody, thanks. And you may have to repeat the question. Sorry, I'm late to the call here. Matthew Siegel, I run digital assets research at Van Eck in New York City. Van Eck is $1 billion asset manager, most known for ETFs. And we were the first TradFi manager who filed for a spot Bitcoin ETF 2017 and have been working tirelessly for 6 years to try to bring this product to market. We have done a bunch of other things in the interim. I manage one of our liquid token strategies. We have 18 different crypto strategies run out of New York and the EU. And it's a very busy couple days with hopefully these ETFs that'll all start trading tomorrow. I can leak a little alpha that the reason I'm late is because there are some very sizable GBTC holders who are disappointed with some of the fees disclosed. The new fees from that product still remain pretty elevated. So it could be a lot of asset movement between and among these products in the early days of launch. I'll just pause there and maybe have you repeat the question specific. Well, I'll just make some intro comments on DeFi as well, as long as I'm holding the mic. In our liquid strategies, we invest kind of across all market cap, and we're looking for tokens that are, have the potential to gain 100 million users, where the economics of the project accrues back into the token, and who are operating in winner take all or winner take most categories. And we, as a regulated investment advisor, regulated directly by the SEC, we can't put client money on chain. We have to hold our tokens with qualified custodians like Coinbase and Gemini. The latter is the custodian on our, knock on wood, upcoming Bitcoin spot ETF. So, we see in the US, it's just the reality. There's a lot of hurdles to DeFi adoption, and there are likely to be a number of KYC solutions that get integrated into, especially Ethereum layer twos. All that's to say that, as friction gets added into the market by regulators, that usually leads to consolidation, right? For good or for bad. I'm not a fan of it. I want the decentralization too, but we have to recognize the reality. And so we do own some DeFi coins. They're kind of concentrated among spaces that we think are winner take all, and to DeFi adoption, we wish we could do more on chain as a liquidity provider, but until November, when knock on wood, the selection is, changes the game at the SEC, then we're a little bit hamstring. I'll pause there.
Awesome, Matthew, thank you. But yeah, so I'm just going to repeat the question just real quick, so you can feel free to share. So we sort of started the spaces off with kind of a juicy question off the bat. So just a quick repeat here. So in 2023, we saw a lot of interesting projects come and go. Some were able to weather the bear market storm, expand development, and of course, stand strong till today. In your opinion, which stood out to you as some of the most interesting underdog projects and or beneficial for users?
Okay, and that's like across all coins or any or DeFi specifically?
Yeah, across all coins.
Okay.
Yeah.
Yeah. I mean, so we've been very vocal about being believers in the architecture of the blockchain, the way they've engineered for abundance, not scarcity, and the user experience. So we've been, we're optimistic for all of 2023, and still think that chain is going to attract a critical mass of developers and users. And we've noticed some recent developments, even on the regular side, getting the Solana USDC more widely circulated, and some exciting real world asset or decentralized physical infrastructure DePIN projects on Solana, like HiveMapper and Helium. I feel like I've never been so incentivized to leave my house, right? Whether I'm driving, getting honey tokens with HiveMapper, or just moving around and collecting mobile tokens from Helium, that user experience is very meaningful for normies who, Helium Mobile don't care about Bitcoin ETF. So I'd say Solana ecosystem still future looks pretty bright for 2024.
Amazing, thank you. Okay, great. All right, so just kind of moving on to the next question. Next question is, how do you gauge if a project has long-term potential? So, what are some of the things that you look for? How do you identify if a project's going to be here for the long term? And maybe a dicey question is also, are there any that are here that you're also a little bit surprised by? So maybe I'll pass this over to Kelly.
Yeah, I mean, that's a great question. I think as it's going to be very important going into this next cycle because we feel like there's been mass growth already. I've been in this space since 2015, and it feels like the space is so huge now, and it is comparatively with 2015, 2016. But when we look at the broader markets and other asset classes, we're not. I mean, Bitcoin is a meme token comparatively with other large assets still at this point. So we need to be aware of that. But we're still not at that 10% marker of global adoption, which would really mark the huge sort of accelerated exponential growth rate and the opportunity that's still coming. Where everybody here is still so early, and so this is a great question because it really highlights the need to not just buy a token because it's under $1. That could be irrelevant comparatively with what the market cap is and the token supply and all this sort of thing. So I think the number one thing people need to really be made aware of when they're doing any diligence, investigating a project is really look into the project. Don't buy it because a YouTuber talked about it. Maybe somebody brought it to your attention. Fine. Doesn't matter where that attention was brought. What are the tokenomics on the project? Understand what the market cap is. What's the token supply and emission rate on it? And then the last thing I think far too many people don't do, especially on smaller coins, is investigate the team a little bit. And if you don't know how to do that, then look into how to do that. I mean, figure out how you can do diligence on the assets that you are trying to put your money in because you want it to grow. Of course, we're not putting money in because we want it to shrink. So if we want our money to grow over time, we need to take authoritative responsibility for the actions we're taking because the market is a beast. The market is not here to congratulate you on your bullish or bearish bias. It's going to do what it's going to do. So you need to have a strategy in place. And the first part of that strategy is what is your diligence strategy in investigating these projects? So again, for me, it's tokenomics, team, and what is the last thing I would say is what is the utility? Is it actually a disrupting utility? Or is it competing in a space that's already got a dominant asset that's taken major market share?
Wow, great. That's actually a really, really good point, Kelly. Check the utility. What is the utility that's backing the token? Check the tokenomics and also check the team. Some really good points. Any thoughts on this? Also for say maybe Mad Crypto.
Yeah, I think Kelly pointed out a good thing by saying to study the team. I think by knowing the people who are building the project, you can know if they're there for the long term or there for the short term. Especially if you see that the founder is a technical person, that's super bullish in my point of view. And I've seen, for example, also you can see where they are putting the money. I saw many projects raise a lot of capital in 2021, 2022, and I saw them also making a lot of events, parties, and some of those projects lost all that money and now they cannot keep building. So definitely how they're spending the money is a really important part of the project, of the how long it's going to survive, how long of a life it's going to have, and if the goal that they're trying to reach is a hard goal. Also, like Kelly said, the utility, where are they pointing to go, or what kind of industry they're trying to disrupt, if it's a hard thing to get to, they're gonna need some time and a lot of capital. So they need to really use the resources they have as smart as possible, because times like 2022 will come and no BC is going to be throwing money and they won't be able to survive at the long term. So I think definitely founders, utility as well. Like mentioned, I wouldn't invest in anything that you don't know what it's the plan. Like, you will lose faith in a project if you don't know what's the plan, if you just see the project's token going down. So know what the project is really pointing towards to, and if you have faith because you see that the team is building, then that will make sense. But if you're just seeing the price and you don't know what's happening behind everything, you will lose faith really quickly.
Mad. I think you made some mad good points there. Yeah, I really like, you know what, I really like your point on, to be mindful or have an eye on how projects are spending their money. I think that's a really good point because you're right. There's, some projects, they raise a lot of money and then they burn through it so quickly, and you're just like wondering where the heck did all this money go, um, and because they have, a lot of great visions around what they want to build, but sometimes some projects just burn through that money really quickly. Maybe it's uh, maybe their investments aren't as wise as they were hoping. Also, really good point on having a look at their roadmap. So, what are they focusing on building? What is their development uh, action activity and yeah, roadmap vision.
I just wanted to just dip in there for a second. The roadmap, I think, is incredibly important, and there's a lot of assets that have been around for a while that people, there's new people coming into the space, right? So somebody might be in next week, and they might have just heard about Quant, or they might have just heard about XRP. Or they might have. It doesn't matter. Everybody's going to be on a different time horizon. If there is a roadmap for any asset, and there always should be a roadmap for an asset you're looking at, but if there's any sort of history with that asset already being around for any period of time, check to see if where they've been on their roadmap in terms of consistency of hitting targets historically, or if they always miss them. Those kind of things also can give you further insight into the team and their ability to meet deliverables. Because a lot of people, they look for, especially even right now, we talk about it with the ETF. Everybody thinks this ETF is going to be absolute god candles immediately after, but time has told us over historically that things tend to be buy the rumor, sell the news. So even when you see something on a roadmap coming up, it doesn't mean that you jump in when the move is already in process, unless you have a longer term strategy. So you need to understand how to read the roadmap and make sure that the roadmap that's already passed in terms of deliverables is being actively consistently met.
Absolutely, good points. Yeah, it's true. Use the roadmap as a gauge. Like, are they hitting those targets or are they missing those targets? And that should kind of give you, a green flag or a red flag as well. So we have quite a few more questions to go, and I'm just trying to also take a look at time here. So Andy or Matthew, feel free to put your hand up as well if you want to like chime in on this question. Otherwise, we're happy to move on to the next question.
Yeah, I mean, I just wanted to just add in real quick that I think that like one of the best strategies with evaluating, as these guys have said, is also just evaluating their brand positioning. Like, the reality is, everything that has been talked about with regards to fundamentals is entirely accurate. The other reality is that in the bull market, half the stuff is like so irrelevant that it's all just this narrative and brand positioning plays. So like, my recommendation to you is, if you are looking at a set of projects, there could be three projects that have way better tech, but one that has nailed their branding and their positioning down, and it is likely in bull periods that project will outperform the ones with better tech. So if you're advising a project, if you're investing in a project, if you're angel investing, if you're a builder, if you're listening to this, what you want to do is find branding that is easily relatable, it is accessible, it is dominant, it is understandable by many, and pick some of the best sectors in DeFi. So DPIN is narrative, right? There's modular blockchains, there's Cosmos. Find projects that you think have a kick-ass brand, and their messaging and their marketing and their attention gathering is absolutely on point. Because literally in the bull, the only scarce resource, it's not money or anything else, it's attention. And so the ones which can gather attention and kill their branding will absolutely do very, very well compared to those who have so much better tech but just struggle with branding. Not to say to invest in shit assets or shit coins, but to say to consider that the time of the market and consider the branding and the positioning of projects within their respective sectors, I think is crucial.
Also great points. All right, Matthew, let me know if you have any thoughts on this, or happy to go to the next question.
Yeah, move on. These great answers from everybody.
Great, awesome. All right, next question is, so which projects or tools do you see that are merging the gap between L1 security and say L2 scalability? So are there any projects that have stood out to you from what you've seen sort of kind of take off and emerge over the past year? And because I know that's a big question. And also, how do we close the gap further between security and scalability, between L1s and L2s? I'd love to pass one on to Matthew.
I think you can't talk about next generation of scaling ETH without ZK tech. And there's a handful of competitors in that space, and more every day. But listening to the comments in the previous question around the credibility of the team, not just the quality of the tech, but also the quality of the distribution and getting that tech into the hands of institutional grade deployers. You guys might have seen the announcement today from Matic with a handful of financial institutions, including Nomura's crypto JV Laser Digital, which is launching an L2. They're going to be using the Matic stack for ZK, and that ecosystem, it's kind of like bridges the gap between being an L2 and an L1, and we think they're going to attract a pretty critical mass of essentially L3s to bundle transactions on behalf of, post those to the main net. So I put that out there as one example.
Amazing, great, thank you. Kelly, do you have any thoughts on this one?
I completely agree with Matthew there, and this goes back to the point I made earlier regarding that 10% adoption, on the S curve of adoption with technology. I think one of those things that I do see the market taking steps towards, but it's still not. I don't think it's maybe 65 or 70% of the way there, is having easy, convenient solutions that aren't a complete negotiation with also putting security at risk. Because if you think about banks, the reason why the biggest difference between decentralized assets and the blockchain sort of ecosystem and banks is that those are single points of failure, right? And you're also essentially having IOUs for your money. But they're banking apps and everything. It's so convenient to do everything. So how do we negotiate that convenience and access to accelerate the adoption while also still not putting things security at risk? And we're seeing a lot of issues over the last 3 years with bridges on stuff. So I think as that technology develops, I think Chainlink has done a really good job with some of the things they're doing with their Oracle solutions, but I don't think we're quite there yet with some of the cross-chain stuff like Dot and Cosmos. But I think it's working its way there. But honestly, I don't really know. I don't know what the solution is there other than them just being diligent and working towards those things, not having to bridge stuff across doing, making yourself feel like MacGyver trying to get stuff between different chains. So I'll shut up now because I'm actually interested in other people's thoughts.
I like the MacGyver comment. Also, just want to welcome another speaker that just joined us, Lewis. Lewis, welcome to the Spaces. We're on our fourth question. Our third question. Happy to repeat it if you like, but maybe you can do a quick intro.
Sure. Happy to intro myself. So I'm Louis. I'm the ecosystem at Starkware. Sorry for the late join. I had issues with my phone and internet, so and apologize for everyone in the meantime. So I'm in ecosystem at Starkware. I'm in charge of the helping the growth of the StarkNet ecosystem project and various developer building on top of it. And I'll be happy to answer any questions about DK and those things. I've been in the space for that quite a long time now. So on the front.
Amazing, yeah. Actually, maybe you could also, if you have any thoughts on this. So the question that we just asked was, which projects or tools do you see that are merging the gap between L1 security and L2 scalability? And if you have any ideas on how we can merge that gap even further.
So just to be clarified, what do you mean? I'm not sure I understand by what you mean by merging the gap between security and L1 and L2 security. But can you maybe clarify it a bit the question? I'm not sure I fully grasp it.
So yeah, no problem. So L1s are known for their security, and
Right.
a lot of L2s are known for their scalability.
Sure.
And so we're trying to curious if you have any thoughts of, are there any projects that come to your mind or any tools that are merging the gap between those two?
So I mean the that's kind of the whole purpose. I mean, I'm talking about an L2, right? So the whole point of L2s is that the trade-off you're making the trade-off of scale are compensating by the fact that you borrow security back from L1 from the base layer. So in that sense, the L2s are already the tool that you were talking about. Like the fact that let's say Bitcoin is very slow. It's actually not. And tomorrow you have L2s on Bitcoin doesn't make L2s less secure. That just makes it a bit slower to do transfer between across L2s. So the tools is more like the question is what is the right trade-off in the L1 security or performance versus what you can get out of it in an L2. And so, for instance, in context of Starknet, which is obviously an L2 on Ethereum, the whole plan, the whole strategy is saying, okay, we are gonna go as hard as we can on the scale, on what the proof provide, on being as UX wise, what all of this, like what we can do best after 12, 15 years of knowing about blockchain and what we learned in the meantime, and we are going to bridge back that tech stack to ETH that is already too big a technology to evolve that fast. And so I'm not sure there is missing pieces. This pieces is being built at the moment. I would just add one extra thing, which is I'm actually excited by something a tiny bit different, which is what I like to call provable servers, or like what people currently call L3s is to me something that is like just a very short-term word they're going to use, and down the line what we're going to see is that what I like to call the provable servers, which is basically if blockchain there is the backbone of the internet of money, then we will need to have web servers capable to natively interact and operate over those assets. And so more than just bridging the gap between security and scale, I think that we're going to get to much higher scale, much higher use cases for blockchain the second we start using those proof servers, ZK servers, to settle back to the backbone that is L2s and L1s.
Beautiful. Well said,
Yeah,
Lewis.
and I think there's a lot there. Obviously, like the concept of Ethereum as a settlement layer is crucial. Obviously, for StarkNet, you guys are getting some flack for being non-Ethereum aligned, which I think is garbage. I think that kind of using alternative VMs like Cairo VM is spectacular for performance. And again, I think it's going to come back. I think to the original question comes back again, and I think Louis, I'm curious to hear specifically what you have to say about this with StarkNet's situation. Is this idea of separating monolithic chains into these modular rollups, which are using alternative DA layers, alternative data availability layers, perhaps an alternative VM, and actually getting the best of the Ethereum as a settlement layer while getting all the perks of speed, scalability at the actual user interface layer. So again, I think that there's something here where these modular blockchains are somehow breaking this original trilemma. So Lewis, I'm curious, like, how you feel
I
about
mean,
that Cairo VM
happy
and
to. Yeah, yeah, of course. I'd be happy to answer that. So it was a bit hard to hear you because you're a bit distant. But what I do understand from this, from what you're trying to say, is how do this how does like modularity solve this trilemma? Which I don't really like the trilemma because this trilemma is kind of made up. This idea that decentralization is decentralization, security, and scale cannot go together. It's just like a made up term because back then you didn't have ZK, but that's a side topic for another time. But the short answer is to that question of this trilemma, and what you can do is if today has by far the most successful economic environment. There is like no doubt. And the way the internet works is today, like the global internet, the one we use every day, is through the internet means the network of networks. It's literally what it means. It's an interconnected network. So you have the backbone, which is like 70 fibers running through the oceans, and you have like subdomains, country size network, and then in this country, you have city and your neighborhood and your house. So down the line, what we're going to see is 100% having those all those L2s becoming basically the equivalent of sovereign environment that will represent a specific economical zone. And inside it, we'd have those ZK provers, ZK servers, or prover servers, what we call now as L3s, that we just connect them to run their application natively at full speed. With the trade-off, of course, decentralization. But if I run Facebook, I don't care about decentralization. What I care about is speed. If I want to play World of Warcraft, I don't care about decentralization. I care of good UX. But the thing is, having a solution when the things goes to shit. And so this modularity we talked about is what is this is the modularity is. We can also I like to think about this modularity more like in the sense of uh, of hierarchical chains, like this network of networks that is depending what application you need. So how Caro help into that is because all those tech stack, all these future depend on the ability to make those very succinct representations, this compression of chain, which was ZK rollup and ZK technology provide. And to do that at speed, you need something that is very easy to prove. And that's actually why StarkNet and Starkware use Caro, which was made to optimize for performance in the context of ZK. So thank you for the question.
Awesome. Thank you. Thanks, Lewis, and thanks you, Andy. Um, if there's anyone else that has any comments on this question, feel free to share.
I would like to add definitely when we're talking about security solutions and especially about L2s, which the strong narrative there is like the shared security with Ethereum. I would go back to Polkadot, which is the OG of shared security with the relay chain. And I don't really see the need to create these L2s, which are a little bit centralized. And talking about Starknet, even for example, their layer three technology, they're starting to use a substrate, which is like the SDK to build blockchains on Polkadot. And we've seen other projects start to use it as well, like Cardano near Polygon. And I think shared security is a model that's gonna be growing a lot, and it's part of this modularity. Now it's really big on the data availability, but shared security is also a part of the modularity narrative. And for example, also Cosmos has been also starting to work on that, trying to bring some consumer chains around the Cosmos hub. So I think we'll see a big part of that layer two narrative go into layer ones. And I also believe that some layer twos will be really big and maybe even become their own layer ones and maybe even help other L2s to build on top of them. And another really cool concept that I've been hearing about around the Cosmos ecosystem is mesh security, which would be really interesting where many chains can mix their security, so they're not just sourcing security from one chain, but they're mixing security from multiple chains into one big like blockchain ecosystem network, not just limiting it to one blockchain.
I'd like to make a comment about this as well, in that I think this is a cycle that's going to be very interesting to watch the change in positions in terms of where things are at on the ranking of market caps, and also basically market share of different assets and the different niches they're in. Because I think this is a cycle where it's kind of, for a lot of coins or projects or protocols that have been around, it's kind of the put up or shut up sort of stage here, where most of the money that's gone into these projects is, I mean, we have to realize most people are out there, they're excited about Bitcoin, or they're excited about crypto because they see Bitcoin having gone up so high, and people don't understand the nature of what a market cap is versus what the token price is. One, and two, the fact that when people are investing in altcoins, they're predominantly they have historically essentially been little mini venture capitalists buying in the hope of what these different projects can deliver. And I mean, even on the top 50, there's a lot of protocols out there that still haven't fully delivered on their roadmap. And I think we're going to see some pretty big swings as some of those things come to market, and they're either overwhelming or underwhelming in terms of them delivering on the promise or hope that they've sort of instilled about what they're trying to address. And with that being said, as the market grows, world and global interest grows as well, which means we have a larger pool of talent and awareness of the space, which also could mean that there's still going to be new projects to come out. And if anybody's been in the space for any period of time, and you look back at what the market cap rankings were in 2016, 2017, 2018, and then you look at where we're at today, there's some tokens that aren't even on the top, they're not even on the top 300 anymore, where they used to be in the top 10. So there's going to be a lot of changes as these deliverables get met. And so my argument there, or my suggestion there, is don't get married to a project just because it was your first token or because something you really believe in. This screams for the need to diversify between different assets and different niches, so you can catch the best exposure across the market without exposing yourself to too much risk.
Very good points from all of our speakers. Kelly, too, that's a really good point. Don't get married to any particular token or project, because you never know. Sometimes we do that. And then, a year or 2 years down the line, they're, like you said, they're not even on the top 300 list anymore. So moving on to probably one of my last questions before I pass the mic over to the lovely Victoria from Bitmart Exchange. So what are some of the current, now we're kind of coming back more into the DeFi space. So we've seen DeFi grow. DeFi has had an interesting and actually a really great amount of growth over the past few years. Now, of course, there is also a lot of more opportunity for it to grow in terms of, user adoption. So from your experience, and I think almost everybody here can probably maybe share some thoughts. Feel free, just for time-wise, guys, feel free to, on the emoji side, either put up your hand to speak or just jump in to speak. But if you do neither, we'll just kind of go on to the next question. But so this one is, what are some of the current challenges that you see in DeFi when it comes to user adoption? So, what sort of solutions should we apply or focus more on for 2024? Now, feel free to, maybe we can pass this over to Lewis.
Oh, great. So, can you hear me? Right. So, I mean, that's a very good question about the next trend in DeFi. To me, the what's missing today is that I still do not get and understand why DEXs are not just as good in terms of UX and performance as centralized exchange. The tech stack is here. Everything is available for it to happen. We have been Starkware have been pushing DYDX as on the back end for like 2 years or 3 years now already. The Apex, Paradex, Brine, all of that already have been running on centralized app chain, basically for like 2 3 years, depending on which one. And we are still like having issue with no private keys and this kind of thing that kind of make no sense. And what I really wish we're going to see coming soon is uh, something like what I call a session key, session account, and basically an abstraction which is actually native on Starknet, what we call session keys, meaning like today when you connect to, let's say, Binance, you don't have to sign every time you do a transaction. You're connected. You can just like click and it works. And so session keys are a key that is less secure but allow you to do um, is basically your key for 6 hours. So it allows you to do a set of operations without having to resign in your wallet every time you do any transaction. And that is going to be, in my opinion, one of the biggest UX unlock, and finally allow us to look and feel like a real web app. Now, there is another missing point is, and this is something actually that is not technical, is I still don't understand why there is no exchanges, DEXs, that partner with a ramping solution to provide free ramping. Today you're using Ramp, you're using Bankside, you give MoonPay, you pay 2% on whatever you deposit. And today that cost is just the way it costs to onboard money, and the centralized exchanges just take that as the marketing cost, and no one is today in the DEX world actually want to absorb that cost and assume that you're going to reimburse it with trades. And that's something I don't get. We are not, the tech is there to build real DEX that feel like sex, and I haven't seen it being built.
That's an interesting point. Thank you, Lewis, actually, for sharing that. Kelly or Matt, do you have any thoughts on that, on the question?
Yeah, I mean, I think education and awareness is a huge thing in all this, and we want the adoption to go exponential. Yes, and some people would argue that has to do with convenience, but there's a weird sort of cognitive dissonance around that as well, because we want self sovereignty and we want personal freedom and we want freedom of access to our own financial lives. But some would also argue that convenience comes at the cost of self sovereignty. So I think there's going to be some huge sort of developments within the ecosystem of trying to find the balance of ease of access, ease of use, while also not giving away the authority to the other powers that be. Otherwise, we're just creating a new model of the traditional banking system. And so I think there's going to be sort of blend of the two worlds here. But I think getting back to what I can't remember, I think it was Mad spoke about it, and so did Lou, and that is in regards to I think UI and UX is going to play a key role in making sure that things are understandable and easy to use on some level. And you're going to give away some of your sovereignty, I think, in doing that. But there's always going to be different protocols and different levels that you can basically participate in. And the more sovereign you are, the more secure your crypto is going to be. But yeah, I mean, I just think that I think the UI and UX experience is still probably only about 30% of the way there for truly seeing mass adoption.
Yeah, also a really great point. I think you're right. That's definitely an area that, I think the more we can improve that, the better, of course. I think the more we can simplify that down, make it easier for users to access, define on how to do different things from deposits to, you name it, getting their account started. Matt, any final thoughts before we move on to the next one?
Yeah, I would say just to unify liquidity and like make it seamless, like everyone mentioned, like for example with the L2 experience, like just be able to move your ETH around any of the layer twos without you even knowing that you're bridging, right? So make the ecosystem more app based and less chain based. So everything is moving flawlessly without the user having to make 20 approvals and knowing which chain of the 20 on the list they have to bridge to. I think that's a big step towards big adoption. So just make it as easy and as less technical as possible. But I think we're on the way there. But still some steps to take.
Great, thank you. Victoria.
Yes, I am here. Thank you so much for hand over the mic to me. So, appreciate all the speakers have all of these amazing discussions. Since we're talking about DeFi, so let's talk about like what is currently happening with DeFi, what has been missing in the Web3, especially specific related to the DeFi topics. And we're in 2024 now, and we're expecting another round of DeFi is coming out. So what do you guys think? Like, if we could implement what is currently missing, that could be a hurdle for the growth for the DeFi sectors in the next round.
I think that's a great question. I think that goes back to what Mad, I think it was Mad, was just saying uh, in regards to app-based versus chain-based. I think the technology has historically, that's obviously incredibly disrupting and changes the entire dynamic of how finance and culture married with money uh, sort of operates. And I think the engineering side, the tech, very tech aware people that were the early adopters, all these different, very highly, like we talk about some of the new updates with Ethereum, the proto dank sharding. It's like nobody coming in. I would say maybe not nobody, 99% of people coming in over the next 3 years, they're not going to give any, that's irrelevant to them. And so I think that the branding sides, one of the gentlemen spoke about this earlier, the branding side of basically scaling a business, not only from the visual representation of the colors and the logos, but actually the actual brand experience. I think driving things less tech focused for the end user and more user focused for the neighbor next door, Aunt Larry, Uncle Linda, all those sorts of things. Moving forward, I think that's going to be the driving focus of which one of these protocols truly explode when they start looking at that part of their protocols, not just how tech advanced it is.
Well, thank you, Kelly. I think that's definitely make the point, and we do see like there's has been the gaps is between one to another, and like let's move to another speakers like maybe Matt and Louis. Do you guys want to add some points on this? Okay, I think that could also relate to our next ones. And what we're talking about DeFi, we're talking about securities. At the same time, we have been seeing a lot of crypto scams and crypto hacks, and has been taking place over the years. And 2022 actually was a big year of all of these. And would you guys think like could be the steps or unique tools do you use and can recommend to the communities like how on the like a regular basis how you protect yourself from getting rocked?
I mean, I'd say first things first. I can't believe I still have to say this, but all of us fall victim to this. Stop clicking on links uh, just because there's an email with a logo from something. We need to be more vigilant about when we open an email. If we're ever going to click a link, we actually go and look to see what the email address was sent from, what the address was, but then also understanding, right clicking instead of actually fully clicking on the link, but right clicking on it and seeing what the actual end link is taking people to. So I think we all just need to be more vigilant about the risk that we are exposing ourselves to when we're doing stuff. The other thing too, as simple as this is, stop Googling the web page that you want to go to. Figure out what the actual address is and type it into the address bar, because there's a lot of, I can't believe Google still allows this, but there's a lot of scam links that are out there that are essentially also sponsored posts and advertisements that look just like the website you want to go to. So when you Google the address versus actually just typing it into the address bar, you're taking yourself into further exposure. And then the other thing is, lastly, diversification doesn't just mean different projects. It also means how and where you're storing your assets. When you have some on a trading portfolio on a particular exchange, I like to have several exchanges that I use, but also the majority of your portfolio, having the long-term whole portfolio and not having it all on one device, having it split up across the several different software wallets as well as hardware wallets, so you don't have any single points of failure.
Thank you,
Yeah,
Kelly. I mean, yeah,
and
go
I would
ahead,
add
Matt.
definitely tools like DeFi, like being able to check how many contracts you have allowed to interact with your wallet. Like maybe you did interact with legit projects, but you don't want to just leave the interaction open in case they get hacked. So being able to connect your wallet in applications, tools like DeFi, which will tell you which contracts you allow to interact your wallet, are very useful. Also with a tool for scanning like tokens, like definitely, we've seen a lot of meme coin season, and we've seen a lot of rug pull. So you can't always. It's really good to just have like 5-10 minutes to double check maybe what's going on with the contract you are buying into. That way, you lower your risk of getting rug pull on these meme coins at least. And yeah, definitely Kelly said it right. Like I get like at least like 5 to 10 emails every week of like fake Coinbase alert, or my fake ledger alert that you have to upgrade something, or and you'll check the email, it's completely fake. So double check where the emails are coming from, the email address, and yeah, be very careful where you click, and definitely diversification in wallets too. Like you can have one wallet for cold storage where you just put money in and put money out. You don't interact with apps. You can have another wallet for DeFi. You can have another wallet for minting NFTs, another wallet for holding NFTs. So just separate different activities. So just please don't interact with your whole net worth with a new smart contract, because it can probably end really bad.
Well, Matt, one of the point you brought out is absolutely, I totally agree with you. So you have to check the DeFi product, and they can bring an additional layer of the securities for all of your wallet and all of these. And another point, and also agree. So we may surprise, like during these days, one of the highest phishing or scam cases actually from the social phishing. Which means what you just brought out, like they're using like a fake emails, or they're using like the emails it looks like it's from the colleagues or like job offering or something like this. We had this very similar GameFi case like in 2021 or 2022, and they lost their private keys because he got a job offer. So he clicked the link, he didn't see that was not a PDF, and then his entire wallet just all compromised. So like always be careful. Whatever the link you received, double check if that is actually a URL or that's a PDF or that is something you don't really recognize it. If you don't really sure what are you clicking, better just like ignore it. Safety is always a top priority. It's like we're working for the exchange every day, and we're seeing the cases all the time, like how like different bridges get hacked and how kind of like private keys can be compromised. So these just like a very hard to prevent, but just like the best way to ensure our asset is secure, just always be alert and always like to be aware like the website or the project you interact to. So and moving along, and I think today is also a very big day for entire crypto industry or the Web3 industry. We're going to have the ETF breaking news relatively come out, like probably I would say like around the market, the Wall Street closing bell, like around 4 p.m. So we have been talking about like the ETF approvals basically across the entire 2023. So there's a multiple like ETFs has been expected to be approved, and the news I saw this morning, they were even expecting the possible trading tomorrow, and always a couple of ETFs are going to approve, couple of institutions. And I like one of the speaker was mentioning like congratulations to everybody who has been joining crypto before the institutions. So, well, we can dive in the topic a little bit more. So, what do you guys think about like the actual outcomes can happening, and what is could be the major opportunities to open up to the users? Let's maybe start from Louis. He has been quiet for a while.
Sure. So happy to. Um, so yeah. So when it comes to the ETF, honestly, I have no idea what to think about it. I'm not gonna lie. I haven't traded actively like in a very very long time, and so um, I'm very just happy that finally like the regulation in the US start to make sense. There was no reason for these.
Hey, Louis. I think
I mean, it will probably
okay.
democratize more
Sorry,
crypto,
you will
make it
get cut
more
off.
relevant for the rest of the world, the financial market, make it more legitimate. But my guess is as good as the next one, so I would rather leave it to other people. If you have technical questions, I'll be happy to help, though.
Well, like I mean, I hear you. Like for trading in the past, I would say a month or two, it's quite interesting, and the market is very choppy. And well, the good news is the volatility is coming back, the volume is coming back, and then it's just like everybody has been expecting. And today is going to be the major milestones, and to see like how the U.S. regulatory is going to play along with this. Like maybe Matt and Kelly, there's something you guys want to add on for the ETFs?
Yeah, absolutely. I think we're in a very, I mean, I would argue probably among one of the biggest days in Bitcoin, other than the Genesis block and the release of the white paper, because this marks the in some sort of sense of the word, the acceptance of Bitcoin into that merge sort of traditional finance space as well as the crypto space, of course. But I think a lot of people are expecting, especially newer retail traders, are expecting the ETF gets approved and it's going to be up and away from here. I think what's most interesting is over this next week we've got a bunch of key things that we need to be paying attention to, namely the approval and when all the listings essentially happen. I think it was Van Eck is already listed on, or sorry, no, 21 Shares is already listed on the Fidelity app for limit order trading. I think I saw a few minutes ago. But the question is going to be not the approval. This marks the end of the ETF narrative of the speculative sort of buying into the approval. The question now is going to be, will things undershoot or overshoot what the capital flow sort of projections are going to be over this next, I would say 1 to 6 weeks, and how quick those capital flows come in, or if it's going to be, markedly underwhelming, because these things can now also be used to shape what's happening with the price action. Because if these things all get listed, and then, for instance, if BlackRock or Van Eck or 21 Shares or maybe all of them combined or something sort of have sort of limited flow on purpose, that would actually, I think, lend itself to seeing uh, a pretty decent sort of drop in the price action over the next couple weeks. But I don't think that's going to be the case. I think we're actually going to see some consistent flows coming in. But what's more important to me is when we look at the chart yesterday on the 1 minute chart, when the initial ETF was approved, everybody thought the ETF was approved. We saw a very quick spike up to $48,000, but very quick rejection off that $48,000. Now, the rejection wasn't because the acknowledgement of the hacked SEC, and that's what's interesting to me is to see that there was a massive sort of selling that happened right at that $48,000 mark, which is just below it, which is essentially the golden pocket from that macro bull to bear market bottom. And so I think there's a lot of uncertainty with traders and analysts right now because of that sell-off pre-acknowledgement of the hack. So I think it's anyone's guess what's going to happen over this next week and a half. We also have the Coinbase court case that's happening on January 17th, which I think could be another sort of cause for volatility, depending on which direction that sort of court case goes and what happens with that with the Coinbase SEC case there. So I am trading right now. I just took a 38% profit on something, but it's only very small positions, trading very small chop. But I think, yeah, I think it's anybody's guess in which way it's going to go. I still think we're going to get a bit of a pullback pre-halving.
Yeah, I mean, right now it just like the volatility is definitely like much higher compared to early like last year. And well, if anybody is trading, like it's always like take the profit and then don't get too greedy. I mean, I'm totally with you. And well, there's one more questions from my end, and it's actually one of my favorite topics. And so we're talking about AIs, and AI has been existed for the past 20 years. Is well educated for all the retailers or institutions. And from the very beginning, we don't really know what is artificial intelligence means until these days. We actually see the tools, we see the applications we're able to use. And I do like one of the HBS alumni recently issued a book called What is Web3? And he defined the Web3 as including AI, blockchain technologies, IoT things, and also X realities, including virtual realities and also VR, AR. So I kind of want to like attach on to those. Like we have been talking about AI project has been trending, and what do you think? Like, what is like the possibilities? What would be like the best or recommended project you guys are looking for? Consider could be like helping or scaling, like from the AI perspectives to the for crypto war blockchain communities. If you have some recommendations, that's definitely also really helpful. Well, none of these are financial advice, obviously.
I'll let Matt, if you want to go first on this one.
Uh, it was related to AI, right? So I definitely think AI will help scale crypto. Like, what's crypto is programmable money, and AI will allow this money to flow even more efficiently, and it's gonna allow to bring more interesting use case and uh, maybe even make automatic payments between different electronic devices without even human interaction. So that's gonna be interesting to see, and definitely, like you say, I think the merge of all these technologies, AI, crypto, IoT, is gonna allow uh, next level experience for humans. Like it's gonna impact all kinds of industries and will allow to manage for example, I think truly decentralized uh, tokenized real world assets will only happen when, for example, the real estate property is managed by AI, and it allows you to enter the property with a NFT key, and then it's just you can pay with crypto, and then some IoT devices know when you left, and they bring in the cleaning service instead of a physical human managing many of these different parts of the a process of managing a property. So it's just gonna bring next level experiences. I think we cannot even imagine the potential that's gonna happen there. And it's just gonna, I think it's crazy how we've seen AI just for a little bit more than a year, and it's just gonna be growing exponentially. And I think we cannot even imagine. And well, we're seeing the Vision Pros of Apple release in February. So I think that's gonna also maybe bring interesting things because I see this like the first apps in the iPhone, right? We're just seeing the start of this kind of applications developed toward this kinds of hardware, and I think it's gonna be really crazy. And I'm also always thinking and telling people when you're investing, I would recommend you to be thinking about what's it gonna be like in 2030. Maybe you can take some short-term calls, but I think the big bucks are made in big cycles, and 2030, I think it's a good goal to point towards too.
Yeah, I mean, I agree with that, and I think you brought up some key points there that I'd like to expand on. And it's not just for AI; it's for the DeFi space as well, and just the crypto market and crypto uh, asset class. And that is 2024 or 2025. I think it's going to be one of those two, where we're going to see a pretty large falling of dominoes uh, in terms of strategic partnerships from large scale institutions. You know, when Apple gets in and starts partnering with different protocols in the space for different types of utility, um, I think Apple, Amazon, you know, the list is long with these major institutions that really help shape the narrative. I think they're going to essentially be picking large in part who the winners are going to be in the space race essentially here in crypto, and that's also going to be with AI. So this is one of the reasons why I think it's important right now not to be married to a project, be willing to be adaptable in the space, but have a sort of uh, broad, diversified portfolio in AI, in layer one and layer two solutions. Um, because when those partnerships are announced, those different protocols, I think, are going to have, pretty substantial growth rates following that, because it's also going to onboard not only the speculative sort of trading of those assets, but also the communities and the communities that are behind those different institutions as well. So, I mean, I'm at a loss of words for how excited I am for these next 10 years, but most near term, the 2024 into 2025 bull run. And I'm proud of everybody for being here because we're still so far ahead of the rest of the world. But I think AI is going to play a major part in that. We just saw, I think earlier today, while I was on this Spaces, I saw that there's some sort of partnership or something. I haven't been able to look into it with Microsoft and ChatGPT and OpenAI, and that's already obviously in place, but starting to do some uh, paid memberships for team development and team integrations and stuff like that. And I think we're going to see once the dominoes start falling with these different uh, partnerships with institutions and blockchain protocols, it's going to be a space race to really sort of try to keep up with the pack with other institutions also. And I think all of them already have teams in place that they're trying to figure out where those integrations are going to be the most valuable and have the most upside with the least risk. And it's going to go back to some of the things we were talking about earlier. And, scalability, speed, security, all those things in place. And I mean, I'm literally at a loss of words for where this is going, which is why I'm pretty widely diversified across a number of these different projects in each one of these niches.
Kelly, just on you and Mad actually shared a lot of really interesting points there. Are there any particular, say, AI projects that you're currently watching that look interesting, that seem to have potential? Again, this is not financial advice. We're just kind of sharing our own experiences and thoughts.
Yeah, I mean, the two that I'm predominantly watching right now for AI is AGIX and FET, Fetch.ai. But then a lot of people classify the graph within the AI narrative, and I guess it kind of loosely is. So I'll speak about it in this niche area that we're talking about. I think we look at Google and how profound impact that Google has had on the world with their ability to index information and capture market share with what they've done. The graph, in a way, this is a kind of dumbed down way to talk about it. This ticker being GRT is essentially something that addresses a very needed sort of utility in the space, and that is to index information within blockchains, right? And that's essentially what Google does on the internet. And as blockchains need to speak with each other or basically call information between each other, the graph is sort of trying to tackle that issue. And I think GRT is going to have a pretty astronomical 2024, 2025. This is not financial advice, only something to consider potentially diversifying into. Don't get married to it. But again, singularity.net, AGIX, I think is probably in pretty good pole position for some pretty strong partnerships. And they've been developing some things for years. They're not somebody that's just new to the foray. So that's one of the ones I'm really keeping an eye on.
Amazing. Awesome. Matt, I'm not sure if there's any AI projects that you have your eye on, but if you have any, feel free to share before I think we're getting ready to close soon.
Yeah. Just definitely not big into the AI movement, at least now. But I think one of the projects that some people categorize as an AI is Ocean Protocol, which is like a data market, and I think well that ties the new oil, right? So definitely very useful for AI to build all this. Uh, Basis of learning of this technology. So definitely one of the projects I am involved in, and definitely around all the projects also which allow like processing, uh, computer power and all this stuff for purposes that could be AI but not limited to. So definitely need to deep dive a little bit more in that area.
Awesome. Yeah, good points. Yeah, I think from everything that you guys both shared together collectively, I definitely made some notes and take a look at some of those a little bit further, for sure. So I think you know what we're coming to a close right now. And before we get into just thanking some of our speakers, I know I just kind of want to touch back on to a previous question that was asked, and it was around DeFi security. And so I know Mad and Victoria from Bitmart we're kind of touching on some of the security tools that DeFi offers that can that's very helpful for anybody that's interested in taking 5 minutes, just a couple of minutes to check to see if there's anything getting flagged in your wallet or if there's anything fishy about a particular smart contract that either you're about to interact with or maybe have already. So yeah, so I mean, for anyone that hasn't tried any of the DeFi security tools, or I mean, any of the tools in general, I definitely highly recommend to try them out. They're free. They're super easy to use. You just connect your wallet and it'll just immediately scan your wallet, alert you if there's any risky tokens or NFT or contracts in your wallet, give you a security score, how much of your funds are at risk. Even you can revoke, right? Lets you revoke right then and there, which means to cancel the access that contract has to your tokens, keeping your tokens safer. And then you have the scanner, and the scanner is another tool. It's a little bit more advanced. It's great for anybody that wants to do maybe a little bit more of a deeper dive into the security profile of a contract. You can see the owner, if there's governance associated with the contract, if the owner is hidden or available of that contract. And you can also even see where the vulnerability is located in the code itself. So there's a lot of more in-depth details for static and dynamic analysis. I know maybe we're getting a bit technical, but for people that do want to do a deeper dive, the scanner is great. Takes a couple seconds, throw in the contract, and it'll give you a really deep dive. It's almost like an audit that happens in a matter of seconds. So that's great. So I just want to encourage people to definitely stay safe. We want to be able to share a lot of these, opportunities with you, various different DeFi opportunities, various different DeFi projects. We want to talk about what people are working on, what people are building, and but of course, and also we want to make sure people are staying safe. So when you're dabbing into one, please dab into security as well. Takes 2 minutes to just take a look at what's going on. So I just want to thank all of our speakers. I want to say a big thank you to everybody who is joining our spaces today. Big thanks to our audience. Thank you for tuning in. And also big thanks to all of our speakers, to Mad, Kelly, Matthew, Lewis, Andy, and I hope I'm not forgetting anybody. And of course, big thank you to our co-hosts, Bitmart Exchange. Thank you for joining us. We wonderful co-host time today with you guys. So also, if anyone is interested in learning a little bit more about any of our speakers, I encourage you to go check them out, follow them, reach out to them if you have any questions. And also, I'd like to invite everybody to also check out. Also, I don't know if people are some of you may not be aware of the DeFi social profile account. And for anyone that is interested in, say, DeFi social, so the DeFi social profile account is essentially like an incredible opportunity if you want to earn rewards, earn badges, and create a significant following. People can follow you. Your profile generates its own smart contract. And it's great. The only way you can get a DeFi profile, though, is if a team member from DeFi gives you a DeFi code, or there is a unique link. So basically, someone who already has an account can share, a link with you, and that's sort of the only way to create a DeFi profile account at the moment. So we did share a link here on the spaces. So if you just kind of follow that thread down, there's a link there. If anybody would like to create their own profile, we wanted to share it with everybody today for the spaces, just to make it accessible. And yeah, and tune in next time. Tune in next time for our next spaces. We're going to be doing more spaces like this. We're going to dive into more juicy content about what are some great projects to check out? What are the challenges in DeFi? How do we merge those gaps? Sorry, guys, I'm just kind of coughing off screen here. And also, we just want to talk about what's hot, what's trending, and how do we support the community in being more and more educated about some of the key topics that are going to be worthwhile and plus keep you safe. Thank you, everyone. Take care and bye for now.